good morning and welcome, or good evening, depending on where in the world you're joining us today from. I'm Saurabh Singh, CPG and retail leader at Polestar Analytics, and you're joining the fifth edition of Bodhi RGM Roundtable Series. Today's topic is personally I'm very passionate about AI redefining the RGM from fundamentals to agentic intelligence. And we are going to have 60 minutes together with the expert panelist over here, and I'm going to do my best to stay out of the way because the conversations they are about to have is worth more, than any prepared agenda for that matter. So before I bring them in, I was looking at the audience list. I think we have people from the RGM background. We have practitioners from pricing. We have some of the AI and analytics, leaders and the practitioners, and also commercial decision makers across CPG. So I think that is exactly the audience that we wanted for this conversation. So with this, let me introduce our panelists. First up is Ivana. Ivana is one of the most commercially seasoned RGM leaders in this industry, nearly 30 years across Mars, Coca-Cola, McKinsey, and Kind, and now leading RGM at Church and Dwight. She has overseen more than $5 billion in trade revenue, and listening to the number itself is pretty mind-boggling, and then driven $200 million in annual revenue through pricing and trade strategy. When Ivana speaks about bridging analytics to execution, I think she has done it all at every scale. Welcome, Ivana.
Thank you. Good to be here.
Thank you so much. Next up is Pavel Mityushkin. He has spent 15 years building AI-driven RGM and retail execution systems across complex multi-market environments, right? He has deployed intelligent frameworks across Europe, and what I respect most about Pavel is that he has been doing this before AI in RGM became a conference theme. Welcome, Pavel.
Thank you a lot. Happy to share my knowledge.
Looking forward to it. And Murtaza Mansoor, he brings 12 years plus knowledge of finance and RGM expertise. Most recently at Coca-Cola Canada and Kraft Heinz, driving net price, elasticity-led analytics, and margin impact across competitive CPG markets. Murtaza is someone who makes the numbers tell a story. Welcome, Murtaza. Happy to host you over here.
Thanks for having me.
Thank you. And before I open up for questions, I wanted to add that, here's what prompted this topic, at least for me personally, that, I spend a lot of time with many of my CPG clients, commercial teams, and I keep seeing the same pattern, right? Companies are investing a lot in AI tools. And I think before that, they should answer a simpler question, what problems are we actually solving? And RGM is still fundamentally about profitable growth. That has not changed at all. But the tools, the speed, and the intelligence available to pursue it has changed dramatically. So today I want to explore that tension, that topic, what stays and what transforms. And with that, Ivana, I'll come to you with my very first question. You have been in the industry for quite some time, and you've watched this function evolve at multiple stages. I want to start with something that sounds simple, but I suspect has a genuinely complex answer. What is the one foundational principle of RGM that has never changed, regardless of the tools, the data, or the era that you're operating in?
I love that question. And I love what you said, that RGM has always been about profitable growth, and that is 100% true. What has never changed, and I always like to look at things from the consumer. So what has never changed is value to the consumer. So revenue is basically created by aligning price to the perceived value at that moment of choice. So consumers aren't buying price, they're buying value. So whether it's a shelf tag back in the 70s, or your online basket in 2010, or right now we're going through dynamic pricing at some of the retailers, and especially on Amazon, prices change constantly. The consumers are always asking, what is the value? Is this worth it to me right now? So I think ultimately consumer perceived value is the number one thing.
And that actually resonates well with me, Ivana, because in my experience also, with analytics team, the companies that struggle most with RGM is not the data. Ones without data, I would say, they are the ones without clarity on what decision the data is going to support. The fundamentals are really about the decision quality and maybe not the data quality now. With the advent of AI, Gen AI, and the kind of data that we can get from multiple sources. I think the real point is where we should take decisions. and give the end users more decision points rather than just inundating them with the data. Correct. And Paul, sorry, Ivana.
No, absolutely.
Yeah. Pavel, I want to ask you the same question a bit differently. What does the RGM fundamentally exist to do? And I would like to, take cue from your experience and maybe not the, theoretical answer.
That is a very interesting question. I would call it philosophical question. My truly belief is RGM is there really to connect the dots. There cannot be one single stakeholder or owner of the revenue growth management process. It is the capability that is orchestrating and arbitrating all the different processes and decision-making processes in the organization. As Ivana told, this is starting from the consumer and the value that is important for the consumer, and that means that the whole organization is working for that. So we will be, from RGM perspective, listening carefully to all the participants of the internal kitchen in the organization. We will be evaluating precisely all the different scenarios and insights that are coming to the table, and we will provide clear feedback and guidance on what can be the best possible scenario and helping people to make the best ever decision.
No, correct. I think that's what is happening these days. So RGM teams often produce excellent analysis. We have great models, elasticity models, waterfall charts and whatnot. But then the decision maker would say, so what do I do differently tomorrow, right? So bridging that gap wherein, RGM team actually earns those brownie points by giving the action points to the team at ground. That's where I think you were also alluding to, Pavel. So thanks for that. Murtaza, you have worked deeply in elasticity analysis and pricing, pack price architecture strategies. In your experience, where do companies most commonly skip the fundamentals and jump to sophistication, and what does that cost them?
Yeah, so I would say companies, they often are guilty of taking a one-size-fits-all approach. So when it comes to revenue growth management, while it's important to stay strategic, it's also equally important to stay grounded in tactics and how something can be brought to life. So strategy is just one part of the equation. Execution is the remaining piece. Once you tie strategy with execution, that is where you can deliver the right outcomes. So when you're planning for a price increase, or when you're planning to optimize promo, as an example, we need to be really mindful of the economic environment we're operating, what's happening macroeconomically, what's happening geopolitically, how are consumers and shoppers behaving at this particular point in time. So when you factor in a broader canvas of facts, then only you can determine the right strategy that ties with the overall shopper sentiment. And if companies, they are not able to think clearly on the strategic aspect of it and then fail to translate it into the right execution metrics, that is where it can cost them numbers, it can cost them revenue, and then it can cause them difficulty in translating their strategic outcomes.
Bang on. I mean, this is something that we see from post analytics perspective as well when we work with our clients. Sometimes team that rush to deploy AI-driven price simulators, for example, before they have clean, consistent baseline data. The model is sophisticated, but the inputs are a mess. They're messed up, right? So the output, more often than not, would definitely get ignored by the commercial teams because they don't trust the source, right? So jump from fundamentals to sophistication skips that layer, which I would call a trust layer. And without trust, and without that change management aspect, even a perfect model sits on the shelf and not to be used, right? Thanks for that. So let's go a bit deeper now. I want to give each of you space to speak from the specific domains, because all three of you are representing genuinely different vantage points on RGM, right? So Ivana, starting from you, drawing from your leadership of running $5 billion in trade revenue at Mars and your work building global pricing COEs, when you look at how AI is being applied to trade promotion optimization, what is actually working on ground and what is still is mostly wishful thinking?
Yes, very good question. What AI is giving us, what is working currently is it's allowing us to not only do analytics at an incredible speed, but it's pattern recognition at scale. So AI is allowing us, it's excellent at identifying patterns that might not be obvious to an analyst as they look at the numbers. It's increasing the speed and the time that takes for that. So we can identify patterns across customers, geographies, mechanics, et cetera, far beyond what a regular analyst or manual analysis could get. That's working. The other thing that's working is some scenario simulations, right? So we are able to simulate a ton of scenarios. We can even optimize and give it, if I reallocate the spend or if I have the next best NBO and next best opportunity, what is that? So that is all working very well. What's to me still wishful thinking is getting to fully autonomous trade decisions. So we talked about, I think you opened by saying that we need to get to a point where we're having AI and our RGM analytics enable our decisions. So AI still struggles with that context. It doesn't understand retailer politics. It doesn't understand competitive retaliation, field realities, threats of delists, et cetera. So there are things there that is still not embedded into that fully autonomous decision making. Execution discipline. So we might get the perfect plan, but getting that to the final edge to get it executed in store, and then compliance in store and actually measuring is that last mile, if you want to call it that. That's very hard. And then ultimately, there's a point where analysis paralysis, you have to be able to replace judgment over precision. So you can't rely on all of it. So there's AI works best when it augments experienced RGM judgment, not when it tries to replace it.
Definitely. And I would also like to tie it back to what Murtaza was saying earlier, that when you're applying AI to promo evaluation, it's genuinely powerful when the data is structured correctly. Just to give you a number, the industry average is that 72% of the promotions don't even break even, right?
That's right.
And that number is honestly is correctable. It can be done much better than this, but you can't correct what you haven't measured. So there are also struggles with where companies want to optimize promotions that were never designed with measurement in mind. So if you can't measure something, how would you improve that, right? So I think we also need to look at it structurally from designing of the promotions perspective. And with this, Murtaza, coming back to you, with your experience in commercial pricing strategy and elasticity analytics at Kraft Heinz, Coke, how do you translate shopper insights into scalable actions, that can actually sustain revenue growth in competitive markets? Because there's often a big gap between the insight and the execution. And this was what we were talking a bit earlier as well.
Mm-hmm. Yeah. So when it comes to shopper insights, there's a wealth and plethora of information that is available to us. So with AI getting top-notch, with access to data becoming easier with the passage of time, we now have detailed information on what and how shoppers are behaving. So when it comes to their ethnicity, their overall demographics, their purchasing patterns, their buying behaviors, their socioeconomic levels. So we have a ton of data, at least in the developed markets. I'm not sure how it is across the globe, but at least when it comes to developed markets where modern trade over indexes, we have a ton of data at our fingertips. That said, it's equally important to know how to leverage that information. So when it comes to taking price increases as an example, and I link this to my point earlier, there's no one size fits all approach. Assuming that your inflation and your cost of goods sold impact next year is, let's say, 5%, you cannot apply a 5% price increase across the board. You need to be very tactical, and you can really clearly establish links between your products and your categories to what the target shopper is, who the actual shopper base is for that product, and then use those insights to drive your price increase strategy or your promo, price and promo strategy down the road. So that's how you link it. Another way of looking at it is from a regional or geographical lens. So there are countries, there are markets. I'm sure Pavel will agree, and so will Ivana. We live in markets that are very fragmented. I'm sure not all of Europe behaves in the same way, and I'm sure not all 50 states in the US behave the same way. Similarly, in Canada, not all provinces behave the same way. So we need to be really tactical when we are promoting or when we are applying price increases to target the right geographies the right way. And then there are also certain markets where, let's say, you may have a share monopoly, but there could be certain factions or certain segments within your country where you may not have share leadership, and therefore how you approach price increases and how you approach promotions could be vastly different. So there's a definite linkage between shopper insights and how you drive strategy. It's just that you need to be really mindful of when strategizing at that level.
Oh, and thank you so much for that, Murtaza. I think the thing that Ivana was mentioning earlier, which is the last mile activation, if I could say so, is one of the hardest problems in analytics. You can have a brilliant elasticity model, you can have a channel level demand sensing, but if the field sales team can't act on it, maybe in their weekly planning cycles, it's all academic, right? So at Polestar, we call this analytics to activation, and it's where most of the RGM investments either compound or evaporate, right? The bottleneck is never the technology or the models. It's more often than not the workflow, the team on ground executing it, and the clear instructions to them and clear recommendations going to that team. This is how you may want to implement it. So I think you both were alluding to the same thing, and thank you so much for that. Coming back to you, Pavel, you have led AI-driven RGM software deployments across Europe in complex, multi-country, multi-category environments, right? If I have to ask you, what's the one key lesson from that work that has shaped your approach to balancing automation with human judgment, and mainly in pricing and trade decisions? What would that be?
There will be one thing that is common, whatever is your category, geography, or whatever. It will be for canned vegetables, for fresh cut salads, and pencils and lighters, whatever. The main question, the main lesson is the attention, the very high level of attention to data that you are working with. Because basically, when it's about the AI-driven software, the quality of the data that you use as an input will be basically defining the quality of the output. And we are all working with very different sources of data. It's the syndicated data coming from the market insights. It is our internal sell-in. It can be sell-through if we're talking about the distributor territories. It can be our own surveys that we were doing with our consumers. So plenty of different data sources that are connected in one data lake will be somehow analyzed to understand the triggers that were there on the market, the different trends, what were the events happening. And when you're building this flow, when you basically already understood what is the data, what are the connections between, how do you organize it all in one place, after that, there will be another question on at which point of this analysis you will stop AI by building the recommendations and the tones of scenarios that Ivana was mentioning, and where you start making your own decisions, and where basically you take the responsibility. Because at the end, whatever AI is recommending, the person working with that and the person taking the decision will be responsible for the outcomes. And this is where then you can be flexible.
Totally agree with that. I would just like to add one thing over here, that where do you need to do automation, right? So automation should be done where stakes, it should be done highest where the stakes are slightly lower and patterns are repetitive, and human judgment should be preserved where the decisions are strategic and has relationship consequences, the way Ivana mentioned earlier, the tricky retailer CPG relationships and the tension over there. I think in our AI work, we design for it explicitly. The systems can recommend, it can simulate, it can alert, but the commercial leader decides and the system learns from that decision. And if we can create that feedback loop back into the AI, I think that's where the AI in RGM will get smarter over time. It will take time, it will evolve, but I think that feedback is very important. Wherein how a human is taking an action during the complex decision-making process, that would make it smarter. And obviously, it's going to take time, right? Uh, Now I would like to shift the format slightly, and I'm going to pair our panelists on specific topics. I'm sure because most of you are, and all of you are, have multiple discussions on RGM, and you all come from different experiences. So this would be a very interesting segue for our audience. So first pair would be Ivana and Murtaza. And I'll start with you, Anna, that from your work of building multi-billion trade portfolios and global pricing COEs, what organizational readiness is truly essential before a company can scale agentic AI in real-time pricing?
Specifically on the pricing side, I think there are two non-negotiables for readiness. The first is having explicit pricing principles where it's clearly articulated. And again, I learned the OBPPC method, which is it's a consumer starting methodology for pack price architecture that Coca-Cola started. I think a lot of manufacturers use that now, but you start with occasion or demand spaces, and then you go to brand, pack, price, channel. So you have to be very explicit in the pricing principles. What price scaling, scoping you want, what do you want to price protect, what trade margin are you willing to trade for volume? There's so much there. So if you have AI without having explicit pricing principles, it will only cause more confusion. The second thing the organization needs is clear decision rights. You need to have embedded processes where RGM fits in very specific places across the organizational processes and very clear decision rights with what the AI agent can and can't do, what requires human approval, and when must the agent escalate. When they see something, when must they escalate? So I think without those embedding or trying to embed agentic AI within the pricing framework, it will just cause a lot more confusion than giving performance and, as you stated at the beginning, driving towards profitable growth.
Sure. And building on this, Murtaza, from your beverage experience, how does this ensure agentic AI scales promotions effectively?
I'll give you a real life example. So back in 2019, we used to plan for promotions. So for those who are not aware, in developed markets, and at least in Canada, we plan out our promotions for full 52 weeks of the year at the beginning of the year. So right off the bat, we know across which retailers, across which weeks our products will be on promotion. And it used to be a very manual exercise. We used to maintain ad grids on Excel by customer, by banner. So imagine if you have, let's say, 100 retailers across the board between large store and small store, and you have 8 or 10 different categories with 8 to 12 different products. Imagine the volume of ad grids and the ad calendars that you'll have at the beginning of the year. So determining that is an uphill battle, but then strategically communicating it internally for trade approvals is second, and then communicating that to the customer is again a very monumental ask. Now what AI does is it helps us tackle all of that very smartly. It saves time, it's more efficient, and it factors into metrics and KPIs that are not somewhat easy to incorporate. I'll give you an example. So let's say if you have a public holiday or if you have a long weekend in later half of the year, AI is smart enough to demand sense. It's smart enough to understand that if you, let's say, promote this pack in this time window, you will derive and generate maximum lift. So these are some of the quick ways where I believe AI has helped us to scale our promotions more effectively. Our promotions are not only sharper, they're not only more effective, but they're also more efficient, meaning that we're only investing across products, in banners, in markets that we can derive maximum ROI.
Thank you so much for that. I think One thing that I can add over here, and taking from your conversation and experiences, there is definitely an operating model gap, if we can say so, which is the space between what AI recommends and what the organization is actually structured to execute. So there are sometimes we have seen in our conversations with our clients wherein this gap exists. So in our implementations, the biggest predictor of success is not always the sophistication of the model. It's whether the company has assigned clear ownership of acting on the output, which you were just saying, Murtaza. Agentic AI without accountable humans, which Ivana was just mentioning some time back, is just expensive noise, and you need to align both these things. Uh, Next up is Murtaza and Pavel. Again, you two would be asked this question. So, Murtaza, I'll start with you again. In competitive markets, what real-time opportunities has AI demand sensing actually uncovered for mixed decisions? And if you can talk about the margin impact as well.
Okay. So when it comes to mix, there are two ways to drive mix favorability. So just to play it simple, mix is basically selling more of something that either brings a higher profit or a higher revenue. This could be either, accelerating packages within the portfolio that command perhaps a higher revenue or a higher profit, or it could be accelerating across those channels and those customers that drive a higher profitability or higher revenue. So this is just a plain simple way of articulating what mix favorability is. And then to answer your question, how AI helps us achieve that outcome. And I would link this back to the supreme processing capability that AI possesses, right? You can throw in as many variables, as many data points, as many databases into the tool, and it can very clearly help you identify across what accounts, across what customers, and across what packages would help accelerating drive mix favorability. So I'd say when it comes to AI, it's basically your supreme processing capability and the ability to determine the right outcomes that can help us scale our mix forward strategy.
Awesome. Pavel, connecting to that, in your RGM and integrated business planning integrations across Europe, what real-time risk have AI-driven elasticity models revealed in non-food trade promotions?
This is a very good question. As I mentioned in the beginning, RGM and IBP should always go together because RGM is evaluating the risks and opportunities that we're basically discussing in the monthly IBP cycle. So I will give you an example. Let's imagine, so we have the IBP monthly routine where the different people from different departments are connecting together to review what are the changes for the forecast from this cycle versus the previous month and understand the different business drivers volume-wise. This is the basic idea of the demand planning cycle. And then when we have salespeople and RGM people on this specific routine on monthly basis, we can go beyond the volume. There is, from financial standpoint, there is devalorization of the volume to understand what is the revenue impact from this or that volume opportunities. But then what Murtaza was mentioning for the mix, this is where the RGM can step in. Basically, let's imagine we have a decent volume available for the promotional mechanic next month with one of our customers, but this is the decent volume that is valid for the entry price level product in our portfolio. This will be good from volume perspective. This will be good from revenue perspective because this is bringing additional value on the table. But from RGM perspective, comparing that, we will see that the mix will be unfavorable because the product is much cheaper than the average that we have in our portfolio. And to estimate this properly, without the AI, without dynamic elasticities, without the tools that can do that on the go, we will need from RGM perspective to spend some hours or days before the IBP occasion to discuss that, to calculate that, to bring this to the discussion. And this needs time. But when we are, I would say, strengthened with the AI-driven software that can valorize this mixed input immediately during the meeting, just as a high-level rough expectation, this will already make our decision-making process a little bit different. And the promotion that we will take at the end to move forward with, or that we will refuse and not execute, will depend on much more levers and much more visibility on the KPIs impact that we had in the, let's say, manual era.
Awesome. Very interesting thing came out while I was hearing both Murtaza and you, Pavel. There is, and I would like to highlight it for our audience, that there's a really important asymmetry in what both of you just described. In beverage, the real-time signals are largely about volume and velocity. Can I capture that long weekend? Can I capture an incremental occasion before my competition does? In non-food, the signals are more about risk. Am I funding a promotion that is actually destroying category margin, or is it giving me a proper sales slip and therefore margins are also secured? So, and amazingly, the underlying AI capability would be same for both of these, demand sensing and elasticity modeling. But the question it is answering is fundamentally different for both of you. And that shapes everything from how you build the model to how you represent the output to a commercial leader who would finally take an action. So this was really interesting to hear from both of you. I think the different aspects, the different perspectives that you brought on in this question was really amazing. Thanks. Next up is Pavel and Ivana. And Pavel, I'll come back to you again. From your analytical experience in complex non-food environments, when does analytic sophistication generally add strategic value versus it creating a execution complexity, if I can say so?
Complexity is very important here. That's a great question. I will give you an example. We have like thousands of SKUs in our portfolio, 3,000 or 4,000 of different SKUs in different categories, platforms, product families, sometimes maybe even different brands. In not food, it is much more complicated than the food industry that I had experienced before that. And when we're working with this amount of detalization, with these drill down opportunities that we may have, we can be under the water with the analysis, doing all the details and identifying all the different drivers. On one hand side, if we're taking the country or region-wise decision, and we need the directional decision to understand where we're moving our business very strategically for the mid-term or long-term perspective, it does not make sense to really drill down at the SKU level. We will decide on the category, or we will, group some line price products, for example, or platforms that are addressing more or less the same consumer, more or less the same occasion. They may be not exactly the same, but still the direction that we want to take is similar, or it's close to each other. And at this level, it will be enough to look at the platform. But then when we discuss the negotiation of the key account manager with the buyer at the banner to understand for the promotions in the next quarter, what will be the exact SKUs, the EN codes that will be promoted on the shelf. We need to understand the week, the day, maybe sometimes even the time of the day where the promotion should be delivering the result. And this is where we need to drill down at the very lowest level of data available. And depending on the objective that you have, depending on the decision that you're trying to take, the detalization will be different. And this is where you need to really make a decision whether complexity is needed and the drill down is needed, or you're making the strategic decision, and good enough will be the level of the details that you will be reaching here.
Very interesting, Pavel. I think linking to that, Ivana, what principles have you developed for keeping analytics focused on high impact decisions without over-engineering the portfolio?
Yet I love the high impact trade decisions. That's the perfect part. And building on what Pavel said, there are a couple of principles. The first is start with the decision, not the data. So ask yourself, what decision will change if this analysis is different? And if the answer is none, you wouldn't change the decision, then don't do the analysis, don't do the work. It's simple as that. You don't need to do the work if you're still gonna make the same decision.
Yes.
Principle 2 is that very famous 80-20. This lives in everything. High impact trade decisions usually live in small set of customers, a few mechanics, handful of strategic SKUs, over modeling the long tail is not worth it. It creates false confidence. It creates distraction. And the third, I think Pavel touched on this, is you design for directional clarity, not mathematical perfection. So you don't need analysis paralysis. You need to get clear decision with known risks, not decimal point accuracy. I mean, I think you said earlier that 60 to 70% of trade promos have negative ROI.
Yeah.
Do you need to know to the decimal point exactly the ROI? And no, you just need to move them in the right direction. You need to get rid of some of the bad ones. So you need to make fewer bad decisions and just start moving in the right direction and not overcomplicate it, not over-engineer it.
No, totally agree with that. I think if I have to give you an analogy, Ivana, I think when I talk to my product team at Polestar, there is always pressure to add features, more granularity, more scenarios, more outputs. But sometimes, more is just more complexity than that the user only ignores, right? The principle I keep coming back to is, analytics should narrow the decisions, not expand them.
Yep.
If a model can give a commercial team 20 recommendations, they will act on 0. But if I give them 3 major actions to be taken, I'm ranked by confidence, they will at least take one decision, which will be much more helpful and much more useful for them as well as for us as implementation partners. We would take a detour. I'll jump to the section wherein we are going to ask you some rapid fire questions and then open it up for our audience. Okay. And Ivana, I'll start with you.
Okay.
The biggest RGM myth busted in your career?
Biggest RGM myth. Let's see. So that revenue comes from finding the right price instead of the right value. So we talked earlier about value. It's all about value. There's no magic price. It's only whether the value is clear or not clear. And that can come from building brand equity to make sure the value is clear to the consumer, or how it appears on shelf, your package design. So there's so many components to that, but it's all around value.
Awesome. Murtaza, same question for you. Biggest RGM myth busted in your career?
Yeah, so that will be lowering price leads to lower revenue. That is not always the case. Okay.
Pavel, your view on this?
I heard many times that RGM can be easily executed as a framework. It's a kind of, the very clear set of tools, ways of working, processes, and so on. In fact, that's not true. RGM is a mindset, first of all. And until you understand that to be RGM-driven organization, you need to change the way you think, all the rest will be just tools and frameworks that will not deliver the value that is really hidden there.
Great. I'm sure our audience is learning a great deal from this conversation. Pavel, next question is for you again. One AI tool you can't live without.
There is no one AI tool. There is never one AI. There is never one tool that you can trust whatever you do. I would say there are a lot of them, and whatever question you have and whatever question you are trying to ask ChatGPT, for example, check what Perplexity will give you, what Gemini will give you, what Claude will give you. Talk to all of them and then make your own decision. And it's like whatever you question, even in your personal life, you never trust a single person you're asking. Compare the opinions.
Okay, sure. Murtaza, one AI tool you can't live without?
Yeah, so if I were to pick, I'd opt for Microsoft Copilot. And the reason why is because it's very seamlessly integrated and interfaced to all of our ERPs, all of our data lakes, all of our systems internally, and can really help us derive the right outcomes. So I'll go with Copilot.
Awesome. I mean, the way it integrates with your Microsoft 365 and all those things, it's amazing. It's your personal assistant built into one. Same question for you, Ivana. One AI tool you can't live without.
So I'll pick a non-tool tool. I love wargaming and pressure testing. It really allows you to choose different how you want to be. Do you want to be aggressive? Do you want to be take it easy? And just love looking at all the different options that you can come up with for your plan.
Sure. Starting with you again, because this question, I think you're the best person to answer this, Ivana. Advice for aspiring RGM practitioners.
So learn analytics deeply, but spend equal amount of time understanding how decisions are actually made in sales and marketing and finance. The analytics and mathematical models, they get you invited, but your influence gets you promoted.
Very good indeed. Same question for you, Pavel. Advice for aspiring RGM practitioners?
I would disconnect it from RGM. I would connect it to AI. This is very important to build your AI first mindset today. This is very interesting idea that whatever you start doing during the day, whatever is your task, whatever is your idea, try to think with different AI tools to collect the opinions and really to have more clarity, to have more views, to have the broader understanding of different, impact factors, this and that on your idea and your task. This will be very, very competitive tomorrow, and we still have the opportunity to be AI first, and let's do that. That is very important.
Very, very relevant in today's scenario. Murtaza, I have a separate question for you. What do you think would be AI's expected impact on trade ROI by, let's say, 2027?
Yeah, I would say initially your synergies or your returns would be pretty balanced, just because you're making a ton of investments in AI and the infrastructure, and the results you're getting would be partially offset. But as we progress along, maybe down the road and medium to long term, that is where I believe the impact would be huge.
Yeah, I also believe that. I think conservatively it should improve by 15 to 20%. But obviously we need to see, it will not be even, right? Something would be higher, something would be lower. But I think the companies that invest now in data and tools and capability would be structurally advantaged in the coming time. Ivana, going away from RGM and AI, what's your favorite way to unwind after an intense pricing session, for example?
A glass of wine, yoga, music.
Oh, yeah, ticks all the boxes. Pavel, for you, what's the favorite way to unwind after an intense pricing session?
Any kind of intense working session, pricing or whatever, is really pushing your brain. So if you want to unwind yourself, you need to remove the pressure from the brain and move it to other parts of your body. You can do some manual exercises, you can do sport, you can move it to your heart, connecting to your family, whatever. Just stop thinking about work right after, disconnect, and that will give you the opportunity to reload.
Very good advice, Pavel. For you, Murtaza?
Yeah, just go out for a walk, get some fresh air, disconnect, recharge, rewind, and then regroup.
Yes. A book or podcast that shaped your analytics thinking, Murtaza, starting with you.
Yeah, I read a book some time ago. It's called The Art of Thinking Clearly. So I really recommend that one. It really helps you to think clearly and think correctly.
Okay. Pavel?
I would pick two books here, and they're not at all about analytics. The first one is Start with No. That is, this book learned me to never take the first decision that you see in the situation. Collect more opinions, pause for a minute, understand what is happening around, and propose alternative solutions. This is first one. And this is very important in analytics. When you're looking at the data and you see some insights, challenge yourself if the insight is true, if this is the only insight or the most important insight that is there in the numbers. And the second one is Customers for Life by Carl Sewell. This amazing book that really, for me, behind the numbers all the time, every time you see at the KPI or at the spreadsheet in Excel, you need to understand that behind the number there is the consumer, there is the buyer, there is the person, an individual. He has his own life, he has his own preferences, values, that are important, his perception. You need to always remember that behind the numbers there are people, and this is very important for analytical mindset.
No, definitely. You want a separate question for you, and with this we'll end this conversation and go to the questions from the audience. The current biggest challenge for RGM leaders in today's post-COVID environment, what do you think would that be?
But I wanted to answer the book question. Can I do that too?
Yeah, please. Why not? Sorry.
All right. No, I was thinking about books. So I give you an analytic book and then a book that's helped me in my work. So the analytic book I love is Noise: A Flaw in Human Judgment by Daniel Kahneman, and it talks about how humans are flawed in the judgments they make based on data that they see. It's an older book, but it's phenomenal. And the other book that I really love is Unapologetic Work-Life Balance by Janine Graziano-Full. It's really helped me in balancing everything that I have to do with a career and everything else on the home life. So I love that. Now to your question, you asked what is the biggest challenge that I see.
Yeah.
Very simply, I think the biggest challenge that we have is we're managing value in a permanently stressed system. The stress on the system is constantly changing, and we are I call the RGM team the chief dot connector. I think Pavel used the word that we connect the dots across many different organizations because we are a mindset. So I see the RGM team as the chief dot connector in that permanently stressed system, and we're the ones that are managing that value.
Awesome. I think on your book side, I also like that author, Daniel Kahneman, Thinking Fast and Slow, if I'm remembering the name of the book correctly. That's a good one, right? With this, I think I will end this conversation among ourselves and move to the questions from the audience. And the first question which I can read is, how do you build confidence among decision makers to actually act on AI-driven recommendations? And anyone can start if you're up for it. Anybody can answer. Ivana, Murtaza, Pavel.
Yeah, perhaps I can go first. Right. So it's basically facts over feelings. I know that with AI, they have this disclaimer at the bottom that AI generated responses can be inaccurate, and that kind of tips off many. But what I'd like to say is AI, I know it's guilty of hallucinating, but that's not always the case. There is human judgment that needs to be exercised. I'm sure all of us will agree to that. But more often than not, your AI tools will give you the right facts, will give you the right metrics. And if all of your recommendations with the right storytelling is complemented by the right facts, I don't see a reason why decision makers will not be persuaded to take the right move.
I think that's 100% right. The mistake is if you allow humans to start debating facts. So AI needs to come from a single source of truth from the data, and AI decides what's economically true. The humans decide what is strategically acceptable and what we should do. But you get into trouble when AI starts debating the facts. Is this real? Is this true? The data is wrong. So you've got to get that part right, where AI is then deciding the facts, and then humans decide the strategic overlay on top of that.
Okay.
I will just add one more point on that AI cannot be responsible for the decisions taken. And this is very important.
Okay. Other question from Peter. How important is currently the in-store data for RGM planning and decision making?
I can take this one. For me, this is strongly depends on the lever that you are talking about. Because from my perspective, I think in different companies it can be a little bit different. But overall, RGM is about price, promo, commercial conditions, and assortment. And for the in-store data, I would say pricing is important, but we do not impact on the shelf price directly. So this is something that retailer is ultimately holding under his responsibility. It is important for us to understand what is the competitor's price point, what is the price index, but this is not for me that much important immediately. So this is something that can be an average over the period of time. For the promotion, it's absolutely different story. When you agreed with your retailer to have the promotion on the shelf, you invested money and you will be having the volume impact from that. You must be 100% sure that the promotion is properly executed. And this is where retail execution is the way to achieve the result, and this is where the in-store data is the only proof of the promotional execution. And this is where it is critically important. The assortment and commercial conditions are more long-term negotiations with the customer, again, where you will not immediately see the impact on the shelf. So in-store is important, but it's not immediately important. It's not right now. It can be over the period of time.
Sure. Okay. Another question, and that is of interest to me as well as a service provider. Will the future of trade promo optimization be homegrown AI or packaged vendor made? Bernardo is asking this question.
I think we've gone back and forth. Some companies approached it and did the build versus, and others did the buy, and every one of them is looking at the other and saying, is that one better? Is that one better? I think, yeah, that's a tough one. It's a question that each company should make for themselves, but it is a tough one. If you home grow it and it's moving at the clip that it's moving so quickly, it's very hard to keep up with that. You have to make sure you have the resources built in internally to keep up to scale and keep up with that. Other companies do best of breed, pricing from them, promo from them, and assortment from this one. That's a really loaded question.
Yep. And I think in my experience, what I've seen is each company has its own strategy. Some people would like to focus on the execution, the strategy part, and give this to somebody else. You manage this for me. And as in when I say changes, the market is moving, you do these changes for me and give it back to me for execution. And then there are firms who have their large GCCs based in India or Romania or somewhere wherein they have teams and they have the resources to do this in-house. So it depends on how much you can focus on these sides and be away from your core, or you want to focus more on the core operations and leave this for the other experts.
Exactly. Yep.
Yeah. I think Dave Sagar is asking one question, which is for smaller CPG companies, and he has given a range under $1 billion revenue. What's the most practical first step towards AI-powered RGM? And I think it will be same for larger companies also. But what do you think would be the first step?
I can answer this one. Go ahead, Pavel.
I would like to put one idea here. The first step towards AI-powered RGM will be the step towards RGM mindset. And then the AI-powered can be very different. You can do investments, you can do very small or big investments, you can do complex software or very local machine learning models, whatever you want. But the first step will be the RGM mindset. This is the critical change in the organization, whatever size is.
I agree with that. I was going to say something very similar. You take a baseline of where the organization is. What do they know about RGM? RGM is probably happening in the organization, but it might be happening in different pockets. So just get a baseline and then understand how much upskilling and upscaling needs to happen. There's a lot of training, a lot of talk to ensure you embed RGM. The tools are an enabler, so it's all about mindset and getting to that, make sure everyone is marching in that same vein of profitable growth, consumer backed. So I agree with Pavel. If you want to, once you start getting to the tools, the easiest place to start is promotion optimization. As you said, 60-70% are negative ROI. It's an easy place to start. It's an easy calculation. It's easier to do the analytics. It's easier to do AI powered simulations on the promos as well. So that part, once you get to that part, but I agree with Pavel. It's all around that mindset and upskilling the whole organization, top down.
No, I agree. I think very important is to first of all answer the question internally that what do I want to solve utilizing AI?
Yeah.
If my forecasting itself is screwed, then I would start from there because that's the base. If I know that what's my base forecast looks like, and this is the base and the foundation on which I need to build promotion or pricing and all those things, right? So as Ivana said, you also need to do an internal assessment where you are in terms of maturity and then start from there. Cool. Shresht Tejasvi, he's asking, in highly competitive markets, what differentiates companies that successfully convert insights into sustained revenue growth?
I'll give two. I know we're close to time, but I'll give two quick answers. Focusing on execution and organizational courage. So if you've got the AI and the insights and you're trying to embed them, this will only work. This doesn't work where AI starts to push upon having to change the current workflow. That's when you start to get pushback. So if you have the organizational courage to get beyond that and change the way you decide things, change the way you look at things, you analyze things, that's when you start to get sustained revenue growth. So I would say getting to the point, that final edge of execution and organizational courage.
Mm-hmm. And what I'd like to add on is it's basically progress over perfection. In a super competitive marketplace, it's equally important to move with agility, move with precision, move with speed, because failing to do so can backfire.
No, definitely. I think we are just right on time. And the audience, the next questions that you have, we will try to get the answers from our expert panelists and send it over to you via email. Thank you so much for registering and being here today. We are at time, and I want to close with a sincere thank you to Ivana, Pavel, and Murtaza. You gave this conversation exactly what it needed: depth, honesty, and the willingness to go beyond the safe answers. So this is rare, and I'm grateful for that. Thank you so much. To everyone who joined us today, this is why we have built the RGM Roundtable Series, not for polished presentations, but for conversations like this one. I hope you have with at least one thing that you will do differently from tomorrow onwards in your RGM scenarios. Thank you so much, and we'll see you at the next one.